Welcome to Mex Moves, the weekly podcast where Damian Fraser and I, Eduardo Garcia, break down the topics and headlines shaping Mexico's business and financial landscape. Hi, Damian. How is everything?
Good, Eduardo. How are you?
Great. This week, we have two very interesting interviews, one with Antonio Tejedo, Head of Investor Relations at Grupo TRAXIÓN, Mexico's largest transport and logistic company that is traded on the Mexican stock market. And another one with Mauricio Schwartzmann, Head of Banks and Financial Institutions at AI payment company Yuno. Mauricio was also head of Mastercard here in Mexico. And as you all know, Yuno was founded by those that created Rappi, a delivery company that has grown quite fast in Latin America, especially in Colombia and in Mexico. What do you have for us today, Damian?
Sure. Well, it's been a busy week. First, tiendas 3B or 3B, the hard discount retailer in Mexico, reported its second quarter numbers, and they're listed in New York, so they report a little bit later than Mexican companies. Really spectacular numbers. The revenues were up 39% in the second quarter. Perhaps what's most striking is same-store sales were up 20%, and these are and they managed that even as their gross margins and their adjusted sort of EBITDA margins were also stronger than the market thought, and the stock performed very, very strongly on the announcement. Now, what I think is interesting is the numbers themselves are good, but also the contrast with the traditional retailers. So Walmart's, I think same-store sales were 1.8% for the second quarter. They're obviously the biggest retailer in Mexico by some way. Chedraui, 1.3%, and so even the other strong performer, which was OXXO, sales were up about sales were up about 9%. So what you're seeing in the retail market is kind of two phenomena, which we've talked about before. Hard discounting doing exceptionally well, led by 3B, but OXXO's hard discounter Bara also had double-digit same-store sales increase. And then e-commerce also doing well, with Mercado Libre in Mexico in constant currency terms, reporting sales growth at sort of 40%, pretty similar to 3B's total sales growth. What's driving that? I mean, clearly, the hard discounters, by offering for the most part private labels, can offer very inexpensive goods at good quality relative to the traditional retailers that tend to offer branded goods. So about 60, just maybe a little bit below 60% of 3B's product is its own brands, whereas maybe the equivalent number at a bodega or at a Walmart is 20%. And secondly, they have many fewer items or SKUs. So I think they might have 900 SKUs, whereas other supermarket can get as high as 10,000 SKUs. So that means they have much more turnover, therefore much more cash flow that can be reinvested in lower prices, and concentrating your assortment in fewer items also presumably gives you an opportunity to buy those items at a lower price. So they reached 3,624 stores, I think, in the second quarter, and growing stores roughly 20%, and moving into different parts of Mexico, the northeast of Mexico, and so on. So it's clearly you've seen some management changes at Walmart over the last 12 months. Clearly, they're going to are responding to this, I should say, and they should never ever discount Walmart, especially in Mexico where it's been so dominant for so long. But for the time being, at least, on the one hand, 3B, Bara, Neto doing very well on the hard discounting, and then the e-commerce, especially Mercado Libre, are doing very well on their end, and they're squeezing a little bit the traditional retailers in the middle, in an environment where the consumer is quite soft.
Quite interesting. The consumer is also much more price conscious, probably due to the little inflation that we had that apparently is now under control. So interesting changes in the retail sector with online and hard discounters.
So if you want, we can move on. There was a news came out in July actually that I hadn't seen, maybe because I was away, but then Fluor talked about it in their second quarter conference call, which brought it to my attention. So ICA bought out the 49% that Fluor owned in their joint venture, ICA Fluor Daniel. It was they paid $175 million for the 49%, and as a result of that, ICA now gets 100% of the division. This is the engineering division that has worked a lot with Pemex, oil and gas, refining, power, mining, and they helped build with other suppliers, naturally, the Dos Bocas refinery. They've also done some pretty other big projects in Mexico. They helped build the Etileno 21 petrochemical complex owned by Braskem at Edesa. That was a $5 billion plant that's still producing most of Mexico's polyethylene. I think the largest ever private investment in Mexico in a single block. They helped with the Cantarell injection plant in Campeche and so on. Now, ICA, of course, back about 8 years ago now, went into bankruptcy, and it was control was taken over by David Martinez from FinTech Advisory, the kind of so-called mysterious Mexican hedge fund billionaire or multi-billionaire at this point, probably, along with his partners, at least in that project, Bernardo Gomez and Alfonso Dangoitia, the co-CEOs of Televisa, in a sort of side business that they have. And since it's been taken over, it went private, we don't have a lot of numbers or we don't really have any numbers on the company, except that we can see in public projects like Dos Bocas, that it's won some pretty big contracts. Now, winning contracts isn't always a good thing in this business, because you don't necessarily get paid or don't get paid on time when your counterpart is Pemex. So my guess is that Fluor was kind of fed up with the dealing with the working capital cycle of Pemex, and was happy to get out. And at least they seemed, as you would expect in their conference call, to be sort of relieved to be receiving some money. And then my guess is that the ICA management and shareholders feel that Pemex is on sounder footing, that they're very powerful people in Mexico, are in a pretty good place to get paid and to continue to win projects and build up the backlog. And so they were willing to fork out this money and take full control of this division. So it's been going since 1993. It was, at the time, I was a journalist, and it was, I think you were as well, Eduardo. It was talked about as this kind of NAFTA play, Mexico investing heavily in these new big energy and mining projects, and big U.S. construction company coming in with the biggest Mexican construction company. It's kind of seen lots of ups and downs, the tequila crisis, then 2008 crisis, then its own crisis. And now it's ending up in 100% Mexican hands.
Yeah, it was a 33-year-old partnership that came to an end. Like you said, ICA was an emblem in Mexico in the early 80s or even earlier, as one of Mexico's most prestigious engineering and construction companies. It's gone through. It was founded by Bernardo Quintana, who was also a very powerful businessman at his time, and then he passed away, and his kids got the company. But this transaction with Fluor was highlighted, I remember, when it was announced as, like you said, the joining of two giants that would take advantage of NAFTA. Probably they did for a while, until ICA ran into problems with some of its other divisions. This one survived for quite a long time. It did a lot of very interesting projects, and it's now coming to an end, with the Mexican side buying the U.S. part of it. I just wonder how much of the engineering capabilities ICA will lose now that it won't have that backing of Fluor, a very prestigious engineering company. But ICA, like I said, was an icon in Mexico many, many years ago, especially for its engineering prowess and capacity. So I'm sure they will, or feel that they have sufficient resources to compensate for losing that capabilities that Fluor gave that subsidiary. So it's an interesting end of the story from the moment that it was created till now.
That's right. Now, what Flora in the call with investors said that they still hope to work with ICA on a project basis. So if ICA needs the engineering expertise on a given project, they can just go out and hire Flora. What's sort of ending as the formal joint venture and the exclusivity and being committed to working together and so on. But there's nothing to stop ICA and Flora working together in these huge projects. You see rivals, as you know, often working together. I'm sure they know each other well and will continue to do it, but on a more of an arm's length basis.
Correct.
I mean, talking about the 90s and the tequila crisis, I assume, Eduardo, you saw the very sad news of the passing of Miguel Mancera, who was the central bank governor at that time.
Correct, yeah. Miguel Mancera was a very important pillar in the way Mexico came out of many of its crises. He was very well regarded in financial circles in Mexico and I think abroad as well. He was the one who told President López Portillo with Adrián Layú that it was wrong to control the peso in 1982 when he blamed the bankers for the financial crisis that Mexico was facing back then. That cost him his job as the head of the central bank. But in a reversal of fortunes, he was appointed head of the central bank, which was not yet autonomous at the time, by President Miguel de la Madrid in 1982, a clear sign of departure between Miguel de la Madrid and José López Portillo, who had chosen him as his successor, but with all the problems that he was inheriting, Miguel de la Madrid decided to immediately send a signal to the financial markets that their new leader was in town, and he hired back Miguel Mancera as the head of the central bank. And he had to face a disruption in the financial system that was brought on by the nationalization of the banking industry that López Portillo declared on September the 1st, 1992. And he also had to roll back the control of the currency that López Portillo had established and that he had decided that it was the wrong measure. So he had to face a lot of things back then, and he gradually evolved that foreign exchange system into a more or less of a free float mechanism. And then he was also very instrumental in achieving the autonomy of the central bank, which was granted by President Carlos Salinas de Gortari in 1994. And Finance Secretary Pedro Aspe also signed on it, and then he was appointed head of the central bank, where he was also in charge of Mexico's fighting policies against inflation. Obviously, he didn't do that well in 1994 because the peso crisis sparked inflation to 52% from a level of 12 or 15% that was then. But then again, he had to address that issue and established new mechanisms that the central bank, or use the mechanisms that the central bank had at its disposal back then to bring inflation back to a level that was much more palatable and that was under control. And so he's a figure of immense importance for how Mexico's monetary policy has been established over the past 40 years, I would say. He also, I think one of the biggest accomplishments that he had was the culture that he instituted at the central bank. He was a very serious man and demanding man, as much as I've heard the people who work for him. Demanding a good sense of being professional, of being careful of what you wrote, of what you said. And so the central bank acquired a culture pretty much inspired by him that has given this Mexican central bank some very high respect in financial circles in Mexico and abroad. He was also the mentor of Agustín Carsten, who came after him, No, after him, he came Guillermo Ortiz, but then Agustin Carson became the central banker of Mexico, and Agustin was a product of Miguel Mancera, if I may say so. Obviously, Agustin has developed on his own, but that culture that Miguel Mancera created at the central bank is there. He was very much a man of helping give education, higher education to a lot of people that wanted to have a formal education. He's instituted scholarships at the central bank. He gave scholarships at the TAM, my alma mater, and where he studied economics. So a man of great accomplishments and a man of tremendous importance in the evolution of Mexico's economic institutions, and it's mainly on its monetary policy, I would say.
What a wonderful tribute, Eduardo. I would just add that with respect to the tequila crisis and the jump in inflation from 7 to 8% to 52% that you mentioned, in the end, a country can only either fix the exchange rate or fix interest rates. It can't do both at the same time. And in 1994, until December the 20th, the finance ministry, for most of that year under Pedro Aspe and then under Jaime Serra, was fixing exchange rate through a crawling peg, which meant that the central bank, newly independent, had to respond to that requirement by moving interest rates to defend this crawling peg, which became ultimately indefensible for exogenous reasons, the Fed raising rates, and endogenous reasons, the fiscal pressures from development banks and from the Chiapas uprising, presidential elections, and other things that were going on in Mexico. So he was in a situation where he didn't control the key variable. Once the exchange rate was left to float, then the central bank, you could argue, achieved true economic as well as legal independence, and it was able to move interest rates with this goal of, and sole goal as it happens, which was put into the Constitution, of reducing inflation. And it went from 52%, which was driven by the massive devaluation at that time, all the way down to inflation that we now see today. That earlier this month, Mexican inflation was lower than US inflation. So Mexican inflation has come all the way down to about 3.2%. It was slightly lower than US inflation reported at that moment. And you could argue that dramatic decline that no one would have expected back in 1995 is partly to do with the legacy of Miguel Mancera, and the people that followed him, many of whom he mentored.
Yeah, as you said, you clearly state that even today, the foreign exchange policy is set up by a committee where the central bank has members and the finance ministry has members, but the deciding vote is on the finance ministry. So, yeah, the central bank's monetary policy is very much, I would say, concentrated or targeted towards inflation rate. Obviously, their voice is extremely important in the Foreign Exchange Commission because of the great economists that the central bank has been able to support and finance their education.
So let's move on. The Wall Street Journal was speaking on Thursday, August the 13th, had a story this morning, Eduardo, that you may have seen, that Mexico, an exclusive story, that Mexico has proposed that the U.S. change the 25% tariff currently imposed on non-U.S. content of Mexican and Canadian cars to a lower tariff than the 25%, and in addition on non-U.S., non-Mexican, and non-Canadian value added. So everything made in North America would be tariff free, and we don't know what the U.S. response to that is, but it's basically therefore, if this is part of an agreement, there would be kind of a two-stage process. One is, are you USMCA compliant? Right now, that's 75%. Then if you are, you would only pay a tariff on that 25% that's non-North America. If you're not compliant, then you would pay the tariff on non-compliant goods. I think that additional official round of talks, I think the unofficial talks going on all the time on September the 11th, and we'll see how they go. But clearly, there's some kind of momentum to be reaching deals. I think for Mexico, it's pretty urgent because you're seeing growth, although we had some decent, slightly better than expected second quarter numbers. Overall growth is still quite soft, and USMCA and its impact on investment is being, I think, rightly been given as one of the reasons for that. Mexico, there's some data in a column by Enrique Contana, one of my favorite columnists, about how Mexico's tariffs on countries that it doesn't have trade treaties with, which is mostly China, but also South Korea. As you may remember, they put tariffs from 25 to 50% in January on many items from these countries. Anyway, in his column, he said that imports from goods covered by these additional tariffs were down from January to May by 23%. Chinese imports in the affected categories were down 28%, and so that the increase in tariffs on China, which no doubt was partly influenced by the US and trying to get USMCA approved as having an impact. Now, you're not seeing that in the data on for example, on Chinese car sales, which continue to grow quite rapidly. And what he is saying is that there's a kind of gap, which makes sense, between the import numbers and the sales numbers, because lots of these distributors bought the cars last year before the tariffs came into place and have been selling them this year. But eventually, that's going to obviously run out. And when that does, he thinks there's some evidence that that's running out right now. You're going to start to see Chinese share of Mexican car sales also start to decline. And then the other thing that he points out is that because Mexico has been paying these 25% tariffs on cars ex the US content, what you're seeing is Mexico is now growing its exports of cars to Europe quite rapidly, because Europe isn't charging those tariffs and they've got this free capacity. So while Mexican exports of cars to the US are going down, Mexican exports to South America and to Europe, now it's not enough because US is so much bigger market, but it's helping offset some of the problems that Mexico is having in the car side.
I like the proposal that Mexico is making. I think it's bold. I don't know if it'll get through the Trump administration, but it's a very interesting and bold move by Mexico. I like that. Okay, you want to have tariffs? Let's put the tariffs, but let's do it in a smart way where you don't hurt the region. You take away the parts and components that are not produced here. So I hope Mr. Greer listens carefully and that the auto industry pushes forward. I mean, the interests are not just for Mexico; they are Canadian. They're U.S. companies based in Mexico and Canada. So let's see what happens. But at least I see Mexico making moves that I hadn't seen before, and I kind of appreciate that. And to be creative and to try to engage and give options so that the Trump administration could feel that they've accomplished something, but at the same time not hurt their own consumers, their own production capabilities, and help Mexico as well. So kudos on that, and let's see if it goes anywhere. It's going to be a tough sale, I'm sure, but there is room for negotiation, I think. I think Mexico set up the bar really high, but maybe you can bring it down and reach an agreement sooner rather than later.
Should we move to quick takes before we hand over to our interviews?
Please.
I have one on Kavak, the used car credit company. Their chief product and AI officer, Alejandro Massa, he went on the A16Z show. That's the podcast of Andreessen Horowitz VC fund that put in probably $200 million to Kavak a year ago. It's a really fascinating podcast because Kavak, under Alejandro Massa's stewardship has gone kind of all in on applied AI. They actually, it's about a 40-minute podcast. We'd asked them on our show, but they said no. I guess they preferred to go on the show of someone who put $200 million in them than to go on our show. But we don't need them anymore because we could just listen to the podcast that they've generously put out there. But they put an agent in charge of their Cuernavaca operations, and they managed, according to Massa, profits rose by 50% once the agent was running the Cuernavaca business. The agent would be sending like voice notes to top employees, asking them to send voice notes back to the agent, telling them how they were doing and how hard they were working and what sales they'd achieved. So it's a bit dystopian, perhaps. Maybe you and I will have an agent in charge of us quite soon, asking why aren't we doing more podcasts or why aren't we getting more listeners? But it's really extraordinary how they've they now have an agent for every single client. So they have literally tens or hundreds of thousands of agents. They'll build an Eduardo Garcia agent that will map everything about you. And basically the goal of this agent is to extract maximum lifetime value out of Eduardo Garcia, learning from your history and learning from all the other agents out that they have. So it's a good podcast. I recommend it. On that, another quick take. Uber invested in Galgo. Galgo is a digital motorcycle marketplace and, above all, lender. So basically, you go to their marketplace, you pick a motorcycle, they give you credit to buy it, and then they send you to the seller. And you turn up and you have your credit pre-approved, and you buy it. Now, clearly, Electra and Coppel have done amazingly well in selling motorcycles on credit in Mexico. We've seen blistering growth in motorcycle sales helped by credit. And if you look if you go to the website of Galgo, the rates, the CAT, the all-in kind of interest rate I saw yesterday was 104%. So if people pay the credit back, it's a very good business. And you're seeing the fintechs, if you want to call them that, going in, trying to get some of that profit for themselves. All good, much better to have competition bringing down rates than having government, as you see in places like Colombia, putting caps. So I think it's highly welcome. And Uber clearly is trying to promote this business through I guess it must be through their venture arm.
Very interesting. On my end, Damien, there is some movement on the electricity sector in Mexico. Positive news this time. Copenhagen Infrastructure Partners, who is a manager of specialized equity funds, has begun construction of a solar power plant called La Esperanza Solar in Campeche, in the southern part of Mexico. The project is expected to have a generating capacity of 420 megawatts, and it will include a 150 megawatt battery storage system, which is very important, as we have talked about this in the past. The importance of having the capability to store the energy, especially with the solar plants, because only they can produce energy in the daylight. So this will probably change the equation for the solar power plants, the battery systems that are now being created. For this plant, the Copenhagen Infrastructure Partners has secured a 510 million credit line from 5 banks, including BNP Paribas, JP Morgan, Chase Bank, Natixis, CIB, Santander, and Scotiabank. And a very interesting element as well, the pension fund Pro Futuro is also investing in the project along Copenhagen Infrastructure's Growth Market Fund 2. And the solar plant is expected to begin operations in early 2028. And on that sense, also 2 quick mentions: Essentia Energy, the gas transport company that we've talked about in the past, and that listed its shares on the Mexican Stock Exchange for the first time last November, is preparing or has done a little bit of filing to do a follow-on on the offering it did a few months ago. And so is the Fibra CFE Capital. Now, obviously, these are just filings, and the future is still uncertain, but it seems like the electricity sector in Mexico is generating some interest, is bringing in companies, and that's good news for Mexico's investment and growth prospects.
Just one final item as you listen to this. The peso may have crossed 17, maybe below 17 to the dollar, but it's right now at about 17. It's 10% stronger than the beginning of the year. And, depending on your perspective, if you're an exporter or a tourism company, this is terrible news. If you're an importer and selling to the domestic market, maybe this is good news. Probably at the margin, not great for growth, given how Mexico, needs a competitive export sector to keep going. But I think it's being driven mostly by the Fed and good inflation data out of the US, so people becoming more sanguine about US rates going up, and that has led to currencies everywhere strengthening against the dollar. But also I think it's to do with Mexico's very strong trade performance. So as we've talked about, Mexico's export growth has been very impressive, especially ex-cars, and faster than its import growth. So Mexico really has a very, very balanced trade situation right now. Now that's partly because there isn't a lot of domestic growth in Mexico, so it also has a negative element. But with a interest rate spread, set is at 6.5 over US rates, and US rates apparently not going up anytime soon, plus very good trade numbers. We've also got some good fiscal numbers out of Mexico. People are comfortable holding pesos, even if there are perhaps some negative implications for the economy and definitely certain sectors in the economy.
I wonder if the central bank should start accumulating reserves to let the peso not strengthen so much because of the damage on the export and all the other parts of the country.
Yeah, I mean, personally, I'd prefer them to cut rates,
True.
because that would help growth, which Mexico needs, and would narrow the interest rate differential. That doesn't seem to be on the cards right now, but clearly, the chances of a rate cut are going to go up to the extent that the peso continues to rally and the tradable sector suffers from that.
Correct.
So, Eduardo, with that, I think we're running out of time. So let's head over to our interviews with Antonio and Mauricio.
Let's do so.
Well, it's a real pleasure to have with us today Antonio Tejedo. Antonio, how are you?
Great, Damian. Thank you. Thank you for the invitation. I'm very excited about the opportunity.
So Antonio is Vice President of Investor Relations at TRAXIÓN. TRAXIÓN, as many of you will know, is the leading transportation and logistics company in Mexico. It's quoted in the Mexican Stock Exchange, I think, for 9 years, almost 9 years at this point. Antonio, maybe you can kick off by telling the listeners a little bit about what TRAXIÓN does in more detail, what products, what services it offers its customers, so everyone has an idea of what the company is up to.
Sure. TRAXIÓN was born in 2011. It was founded by a third-generation transportation entrepreneur together with a private equity fund, one of the leading firms in Mexico, Discovery Americas at the time. The company was born institutional, which is very odd, if you will, for the Mexican market, because it's dominated by family-owned companies. It's very informal and it's not that institutionalized, the industry in the country. The idea behind founding TRAXIÓN was precisely to create something that did not exist at that time, which was an integrated platform of transportation and logistics and mobility solutions across Mexico. The company started with this first round of family and friends together with private equity and started acquiring and integrating some companies. Those companies were the leading companies in their niche or in their business line. For example, intermodal transportation or cross-border transportation in Laredo, or people mobility from and to industrial parks and manufacturing hubs. 3PL, which is warehouse management, third-party logistics. So management put together this huge platform to provide precisely these services. Now, I think 15 years down the road, the company is the leading, as you say, is the leading, and is the only company in the country providing an integrated solution of supply chain. Clients in Mexico are used to hire or to engage 5, 6, or 7 different companies to manage their supply chains, which is a nightmare, by the way. So what we do is we provide an integrated platform, one face, even though we use third parties in much cases to complete and to render these services. The client sees one face, which is TRAXIÓN. And today we have a very sizable operation. If you take a look at the sheer size of the operating infrastructure, of the commercial muscle, of the technological platforms, of the balance sheet of the company. By the way, we are the first and only publicly traded company in the sector, and we have access to more efficient sources of capital by being publicly traded. And then if you take a look at everything and you summarize it, there's no other company that does the same as TRAXIÓN. Obviously, we have competition in our business divisions, in our business lines, and fierce competition at that. But there's no single company with the size, and there's no one attempting to achieve something like this. And I would say, and I don't want to sound arrogant, but I would say that there's virtually impossible to replicate what we have right now without engaging a huge private equity group or huge investments to put together such a platform, such a large platform. I think the company has right now has evolved. It has become increasingly asset lighter, and I think this has to do with the strategy that many companies in the U.S. followed in the past 2 decades. Well, there's the example of XPO Logistics, right? XPO Logistics started as an asset-based company, transportation company that migrated to logistics, 3PL, transportation brokerage in the U.S., and now they spun off two different companies from XPO. There's still XPO, which is an LTL trucking company, and then we have RXO and GXO, which are 3PL warehouse services and brokerage, transportation brokerage. So now there are these 3 companies out of one, right? And I think we are following that model. We started reporting the Logistics and Technology Division in 2021. It represented less than 10% of revenues, of consolidated revenues at that time. Today, the Logistics and Technology Division, which is the asset-light arm of the company, represents virtually 50% of revenues. So we're increasing asset-lighter. We are increasingly less CapEx intensive because of the growth we have experienced. Obviously, if you run a trucking division, which, by the way, is the second largest fleet in the country, and the People Mobility Division, which is the largest by far in the country. We are 9 times larger than the second largest competitor in the country. It's a huge investment if you want to grow, right? But we have managed to find a way to balance the CapEx investments together with asset-light growth to be able to combine these services and this platform on a more efficient way. For example, if you take a look at our fleet today, it's 2,230 trucks. Okay, that's a trucking fleet. If you take a look at the second quarter or first quarter of 2021, 5 years back, it's exactly the same size. 2,250, 230. It went up to 2,300. But it's the same. The message here is that we have not grown the fleet organically. Okay. However, we started the brokerage business in 2021. Now we operate, I would say that around 5,000 or 6,000 trucks, third-party trucks that we have available. Okay. So we have basically more than tripled the cargo capacity of the company without having to exercise growth CapEx. And we have been able to funnel that CapEx in the people mobility division, which needs, in the past few years, needed more growth, and the use of that capital is more efficient that way. So I would say that the company keeps transforming itself, and I think that we will keep doing so in a way, because there are many things still to do. You asked at the beginning of the question what the company is up to. I would say that the company is up to many things. There's a lot of things still to do in Mexico. The logistics services in Mexico is still severely underpenetrated, both supply chain management, contract logistics. In a nutshell, is all the contract logistics services and the brokerage, freight brokerage businesses. Think of this. Think of our platform as one of these platforms that you open the app in your phone and you request a card to take you to another place. This is exactly what we created in Mexico, but for cargo. On one hand, clients list their cargoes, their loads, and on the other side, third-party fleets apply for those cargoes. We provide the connection, we do all the paperwork, the evidences, the invoices, everything. And we charge the client, we pay the provider, the third-party fleet, and we keep a fee. That's how it works. And we have been gaining market share because it was basically non-existent 5 years ago. So it's very interesting what we want to do. We have plans to expand into the U.S. Right now, because of the situation, you know that the trucking market in the U.S. is going through the worst crisis in the past 4 decades. Some say that it's coming to an end right now, but who knows, right? But one of the ideas is to expand into the U.S. because if we are able to provide the full door-to-door service with our own infrastructure, it's going to unleash a lot more of value than if we use third parties. And in the end, there's a discussion about the trade between Mexico and the U.S. The real thing is, whatever happens, the trade between the two countries is not going to end. Both countries, the trade between both countries is so intertwined in many things, in many industries, in many products, in many value chains, that it's never going to end. Quite the contrary. We think that it's going to grow and to strengthen. We are seeing investments on both sides of the border in infrastructure, in technology. We are seeing more sophisticated players up there. We are seeing many things that tell us that we're in a good place. So I think, and wrapping up the answer, Damian, I think that we are up to very interesting things that will create sustainable value over the long run.
So a follow-up question before handing over to Eduardo. I mean, first, the synergies between taking kids in the morning to the American school and managing a warehouse in Tijuana. Like, what are the synergies between all these different logistics and transport businesses that you're in? And secondly, related to that, a lot of companies that have grown through M&A have found it kind of more challenging than they expected, absorbing different cultures, different IT systems, different ways of doing things. How's it been, this process of putting together all these different companies in quite separate sort of businesses?
Let me answer the second question first. It's not always easy to integrate a company because of the culture, because of what you said, the technological platforms, management. It's not easy. But let me tell you what we do. We always seek for successful, well-run companies with very strong footprints in their niche or in their business. Okay. Obviously, those companies don't come cheap. Okay. We don't do turnaround stories because they take time. They consume a lot of capital. What we do is this. So if you integrate such a company, successful, profitable, well-run, typically, even though it could be family-owned, typically they have certain levels of institutionalization. And that makes easier the integration. Okay. Aside of that, we have a 100-day integration plan before closing the deal. So we have a very good roadmap. I don't want to mean that it's bulletproof, right? Because there are always things and matters that arise on the process. But we have been doing this for many times. The founder of the company, Avelik Shine, has 28 M&A transactions under his belt. He's a very knowledgeable guy. He knows a lot of how to integrate companies. He knows what to look when he sees when he is looking for something. And with these processes and this in mind, we have been able to integrate this platform. It's not easy, but for example, we bought a company from one of the leading private equity groups, Tresalia, 3 years ago. That company ran like a Swiss clock, so the integration was like a glove. In 2018, we acquired a trucking company from another private equity group in Mexico. It was the same. Last year, we acquired Solistica from FEMSA, which it came from FEMSA, so it was like, super lean and very well run. So typically, it's easy. It's not cheap, but it's a lot of value to unlock. And that leads me to the first part of your question, which is synergies. Usually, the largest and biggest and most important synergies are commercial, because we can do cross-selling. Okay, for example, we do a service for a very large e-commerce company. We concentrate merchandise in South California and South Texas in a warehouse that we run on behalf of the client. We concentrate merchandise. We do the importation process into Mexico, all the border process. Then we load that merchandise in our trucks, and we do the long haul and we deliver into the distribution centers of this client. And then we do a portion of the last mile. And on the other hand, we also take employees to the distribution center, back and forth. So it's a very integrated service for this. This is one of our most significant clients. There are other synergies, operational synergies, procurement synergies, fleet maintenance. We are one of the largest purchasers of diesel fuel in the country. We're one of the largest purchasers of tires, of lubricants, of spare parts. We run a lot of artificial intelligence programs that help us to better concentrate our commercial efforts with people, for training people, across the 3 business divisions. And basically, in a nutshell, those are the basic synergies. But commercially speaking, when we acquire a company, the idea is to double or triple revenues in less than 18 months. So that's what, for example, right now with Solistica, the integration of Solistica and TRAXIÓN was the most relevant in the history of the logistics industry in Mexico, and has proven to be more powerful than that 1 year down the road. We have a commercial and sales pipeline of an additional 1 billion pesos, which is 6 or 7% of the, but we didn't have in the budget at the beginning of the year. So commercial synergies, and it's much more. Synergies are much more of what the Excel spreadsheet tells you when you are analyzing the transaction.
Tell us a little bit about what Solistica sort of did under FEMSA and now how you're managing it now that it's part of TRAXIÓN.
Yes. Solistica had two main business lines. The first one was 3PL, warehouse management on behalf of third parties, of clients. And the second was transportation management, which is they already managed the warehouse for the clients. But there's one thing before the warehouse and one thing after the warehouse, which is transportation, trucking. So what they did, because FEMSA had not a dedicated fleet for that, what they did was they sought or sourced fleet from third parties for their clients. So that was very well. That's one of the things that attracted us the most, because at the end, Solistica, we uploaded the transportation management business into our brokerage division, and the volume basically doubled. And we, on the other hand, on the 3PL, we added 50% more warehouse space under management. With that, we manage around 1 million square meters of 3PL warehouse right now. We are basically one of the largest operators now in the country.
You said that TRAXIÓN is almost impossible to replicate. would you say that is because of the size of your fleet or your logistic knowledge that you explained a little bit, or both?
It's both, but not only that. Because putting together an 11,000 unit fleet is not going to be easy or cheap. That's one. Second, to put together the logistics platform that we have, because it's not only the clients that we have and the space and the volume that we manage on behalf of them, it's also the warehouse management systems, which are very advanced. For us, technology is the centerpiece of the business. Technology has allowed us to be one step ahead of client needs and one step ahead of competition, right? So there's the fleet, logistics capabilities, technological platform, operational infrastructure, because if you want to put together something similar, you need to, lease 16 operational yards all over the country. We are one of the largest operators in the Nuevo Laredo border. We do more than 200,000 border crossings per year. So it's a lot of activity every day. So that's why I say it's virtually impossible to replicate currently. You can do it, of course. Nothing is impossible here. But right now, at this time, I think, and especially taking into account how things are geopolitically and, macro, I think it's virtually impossible at this point. And also the balance sheet of the company, the sheer size of the balance, the access we have to debt. We just issued 2 billion pesos of bonds that a specific investor asked us for. There was a directed transaction for them, a bond just for them. It's publicly traded, but what's for them. So we have ratings with agencies. We have very good ratings. So I mean, the whole thing. It's what I think is very, very hard, if not impossible.
At the right moment, at the right place, with the right people.
I would say so, yes.
But let me ask you a follow on that. You said that you also hire third-party providers. How do you guarantee the quality, the time, every other element that TRAXIÓN offers its clients when it operates its own fleet with a third party? How do you evaluate them, or what's your
very thorough supplier onboarding process and certification? For example, if you want to participate in our brokerage platform, the company needs to have a certain average age of the fleet, 3-4 years. They have to have their insurance papers in order. They have to have adequate operating infrastructure. It's like, Airbnb or Uber. You cannot be an Uber driver if you drive a Toyota Corolla, a 2002 Toyota Corolla. I mean, you need to have a proper car, well maintained. Same with Airbnb. If you want to lease your place as an Airbnb, you need to have it clean and with nice furniture and well located. We seek for the same at the end because we are the face for the client. So if the service goes wrong, we are liable, right? We provide this. It is important to say that we use third parties for services where the client is less sensitive to level of service rather than price. And let me make a parenthesis there. When we need to transport, or a client needs to transport petrochemicals, hazmat, refrigerated, food grade things, more specialized services, we do it with our infrastructure. Because we cannot and will not and won't rely on third parties for that. What we do is regular dry van services. There's a different sensitivity to the level of service there.
Which I would assume is also on the personal mobility.
In the personal mobility, we don't rely on third parties whatsoever. Imagine we have one of our largest clients is Kia Motors. They run a large assembly plant near Monterrey. It's called the Pesqueria. We take their employees every morning. Well, every shift. It's 7,000 employees every shift, 3 shifts per day. So it's 250 buses every day. So imagine the infrastructure, the logistics, the technology, all the operational infrastructure you need in place to run such a contract. What Kia wants is that their 7,000 employees arrive on time, because they roll out one vehicle every 53 seconds. So imagine if you have to stop the plant for 20 minutes because the chief welder didn't arrive because his car broke, or he was taking public transportation and then whatever, flooding or whatever. So we need to ensure that, because Kia is sensitive to level of service. Actually, we run many technologically driven features for them. We have boarding controls, we have route planning for users. We have many things that are value-added services that make the experience better for them. For example, you can plan your route. If you live here in the corner and there's a route that picks you up 300 meters from here, but then you want to spend the night at your mother's place, you can plan the route tomorrow and see which routes are near your mother's place. And then our system allocates the employee boards. When the employee boards the bus, they scan a QR code that sends a signal to the client and says that the client X is riding at 7:19 in the morning, and it's on time. Those things, our competition, they don't have it.
This, obviously, the use of technology you mentioned is tremendously important. You hinted about AI. What can you tell us about how AI is impacting the logistic model of
For example, I would say three main things. We run software a routing optimization software, because obviously if you run a bus, these 250 buses for this client, it's a 5-year term, the contract. In those 5 years, people get fired, people get hired or fired, and they change places. So we run this route software using AI so that the client stays with the same amount of buses and the same amount of kilometers driven every day. They don't have to shift more, and so that you don't have to charge more the client. That's one. That's basic AI, right? Then we use AI for fleet maintenance. The manufacturer says, if you buy a car, the manufacturer says in the manual that you need to service your car every 10,000 kilometers. What these AI features say is that it's perhaps not 10,000, it's 9,700. Or if you run the bus at sea level or in the mountains, what brake pad you need, so you don't have to purchase the same things, and maintenance programs are more efficient, cheaper, maintenance lasts longer, buses and the units are well maintained. They run better. And then we do this AI for the commercial sales for, as I said, instead of having one person selling 3 or 4 services, with AI we focus who is better at what, and we focus and channel that talent on one service. That's basically what we do with AI, and many things that we are exploring and many things that we are running. We are running pilot tests and many things, but AI is going to play a very significant role.
Antonio, since the IPO, the stock TRAXIÓN hasn't performed especially well, and the valuation is quite low compared to the rest of the Mexican market, kind of mid single digit sort of multiples of cash flow, low single digit multiples of cash flow. Why do you think investors, on average, haven't bought into the TRAXIÓN story? And what are you doing as the Vice President of Investor Relations to address that?
There are 2 main concerns, and this is a very good question. The first concern is that the company has grown significantly since inception. It's a 23% compounded annual growth rate since IPO. Basically, it's a huge growth. That growth didn't come free, right? We had to invest a lot of money. We executed an equity follow-on in the summer of 2023, right? It was 3 years ago. It's August 10. It's almost 3 years ago of 2023. So I think the first concern of the market is that we have been growing a lot and cash flows are not there. So I think that there's a disconnect in the market between a high growth company and a high free cash flow generating company. I think that's the first disconnect and concern: the cash flow generation and net income at the end. Obviously, all the interest rates have been up for the past 3 years, 4 years, and that also hurt the bottom line. And the second concern, I think that if you take a look at TRAXIÓN 2021, 22, and 23, and part of 2024, TRAXIÓN was perceived as a nearshoring proxy, right? When the nearshoring term had a lot of traction. So I think that after Liberation Day, the perception of nearshoring in the country went down a lot, decreased, and I think that hurt the stock price. I think that many large funds from the US especially, sold their positions because of exposure to Mexico. And I think they're waiting in a wait-and-see mode. We had a very bad past 4 quarters because of that. Our cargo division has been severely hurt, especially margins. And it's because of the situation. I mean, consumption is low. Most industries are reflecting lower volumes. That doesn't mean that the nearshoring is over. I think that the nearshoring is a paradigm shift for the country and is going to keep transforming it for many years to come. But I think that the perception has hurt our stock. And I think that several things need to happen for that to change. One of them is obviously the macro and geopolitical environment, the trade perception between the Trump administration and Mexican government, and then also a turnaround in the macroeconomic situation. And then we need to have 2 or 3 very good quarters of results for the market to confide in us again.
And you recently announced in the second quarter, I think, a reduction in capex, for example. What kind of measures are you taking to achieve that objective of raising the valuation?
I just told you that the cargo division, well, the cargo market in Mexico and in the U.S. both, is very low. There are lower volumes, lower prices. So you have a lower price for your service. You have your cost and expense structure, so margins compress, right? So in some cases, having the asset is not justified for the return. So what we are looking is we renew our fleet, our cargo fleet every year, around 20% of the cargo fleet. What we're looking this year is we're not going to renew it. We're just going to sell the truck and not going to replace it, okay? And we are shifting some clients that are not profitable to be operated via Traxporta, via the brokerage platform. And that's going to have, the first effect is that if you don't renew your fleet, you are going to have 500 million pesos less capex, right? And then that's going to have 3 effects, basically. We're going to move revenue from cargo to logistics because it's going to be operated through brokerage. It's going to have an impact on EBITDA margin because the services we operate in cargo, asset-based, have a basically double margin than brokerage. And then we're going to have an impact in the balance sheet because we're selling trucks, getting rid of fixed assets to current assets, and then in cash flow. So it's going to be, I think it's a win-win strategy. What we have announced in CapEx is basically reducing the renovation of the fleet. If in the future prices go back, volumes go back, and returns justify to have the asset, maybe we can think of growing the fleet again.
You mentioned that you are the largest consumer of diesel.
One of the largest. I don't know. There's no public information. But
In that sense, prices of fuel might also explain a little bit of the undervaluation of the company. What about security?
Well, security is an issue. It's a very serious issue. Sadly, owner-operators and smaller companies are much more vulnerable to security than large institutionalized companies. Even though for us it's not financially relevant, it's very relevant for clients. Our clients want their products on the shelf of the supermarket, not that they get robbed and they got a payment from the insurance company, right? So we make sure to give that peace of mind to clients. We have protocols. We have a safety or security committee in place in the company. We share best practices. We have many things in place. We have reduced significantly our theft index. In 2024 was around 30 per year. Last year it was 5, and this year is much less than that. So for us, it is not an issue. For the industry, it is, but we work very hard. That doesn't become an issue for us.
In that sense, your logistics also compiles information to select the routes that are safer, less complicated.
We operate in the more transited routes. The 57 highway up to the border, to the Pacific, to the Gulf of Mexico. We are not in the Sierra of Guerrero. Giving up televisions. We run in most secure routes.
I think that's it, Antonio. Thank you so much for joining Mex Moves.
Thanks for the invitation. Excellent weekend.
So very excited to have with us Mauricio Schwartzmann. Mauricio is the Chief Banking and Financial Institutions Officer at Yuno. Yuno, as many of you may have read, on Wednesday announced a raise of $45 million from some of the most prestigious international venture capital funds. How are you today, Mauricio?
Excited to join you guys. Thanks for the invitation.
So, Mauricio, maybe just tell us a little bit about the raise, what you think that these big VC funds saw in you, and what are you going to do with the money?
Well, it was an interesting process for Yuno. I just joined the firm, so I was able to be part of it, and a great learning opportunity for me as I step into this space. I think that when you think about fintech and the space where Yuno plays is a very distinct and interesting space. So we're seeing most of our VC investors in the cap table repeating again, and some other interesting ones joining. And in particular, I love having global PayTech Ventures leading the round, which is the owner or the president is Javier Perez, an ex-Mastercard. So it feels like full circle for me. But what's interesting is the change in the perspective that the industry is having, and the importance of having AI embedded into what we do as part of the moat. And I think that where Yuno stands today is not raising money to buy growth, but rather to just continue the path of growth that we're seeing at the market at a global scale for us.
So maybe just tell our listeners what exactly Yuno does, because not everyone's going to be familiar with it, and how it's different to other payment tech companies out there.
Yeah, sure. So, Yuno started to solve a problem that the two founders were having at Rappi. Rappi had to integrate in 10 markets to multiple payment providers and fraud tools, and had to manage the payment operation in several countries. So, they noticed that it was very hard for a company like Rappi to have to do integrations, maintenance, optimization, and there should be a solution for this. And that's how Yuno was founded. So today, Yuno is a platform, a technology platform that connects merchants into payment service providers. Meaning that if you're, an e-commerce site and you want to operate in 100 countries, Yuno is that technology layer on a single API that provides the operational platform where merchants can operate at a global scale in a very effective and efficient way. So that's the concept. It's a platform that connects through technology, merchants and payment service providers globally.
Mauricio, and you mentioned earlier, AI is probably what drove this new round of investors into your company. What did AI brought or brings to that we hadn't that other companies don't have?
Yeah. So I don't know if other companies don't have, but what we like is the concept that we're an AI native company. So that means that we have AI embedded into 3 layers of what we do. And this is not a chatbot connected to the service that we provide, This means that first, we're building using AI. So our engineering teams are developing using AI as part of the strategy that makes it very efficient and allows us to scale very fast. The second one is that everything we do, the way we route payments, the way we do retries, the way we manage data, is driven by AI agents. So we use it on our day to day, and every employee in the company is using AI to have a lot more capacity and delivery vis-a-vis other companies that don't necessarily have. So I personally have 5 agents working for me, and I'm able to deliver a lot more value in a faster and cheaper way than with traditional models. And the third layer is what we offer to clients. We do offer agents to our customers in a way that they can also improve their operations as part of the value prop. So, I think that's sort of the perspective around how Yuno operates with AI and how it makes it different in the way we can really scale and become more efficient at a global scale by using AI natively.
Sounds very interesting. And so it's integrated not just on the service, but on the development of the engineering. It looks like AI is part of the whole structure of, how do you see AI changing payments and banking over the next few years? I mean, it sounds like you're already using AI for almost everything, but do you see any future alternatives where AI can help,
Yeah, no, for sure. So first, I guess the payment ecosystem at a global scale is going to change materially based on access to AI. So first, as you think of commerce globally, we're going to see agents doing transactions in the name of consumers. So I will give an agent an instruction to go and search for products and buy it for me under certain rules or conditions, and that is being developed at a global scale very fast. So brands like Mastercard, like Visa, are developing protocols to make sure that transactions are safe, are secure, and record the intent of those transactions in a way that we can rely that the agent is doing what the consumer wanted. So that's one space where it will optimize it very much, and that institutions need to be prepared for those type of flows that are already happening. They're still at an early stage, but we will provide the ability for them to have access to the protocols and not need to build on their own and be able to be agentic commerce ready. The second one is the way we manage payments. Historically, we had teams of people monitoring payments, managing chargebacks, analyzing data. So we can replace people and processes by the use of AI and make it more efficient. So that means less chargebacks, less fraud, and better approval rates as part of the whole process. It doesn't necessarily mean less people in the system, because it means that you can actually use that people for other more value or specific tasks that need to happen. Because we don't see a future where AI replaces people 100%, but we do see a place where we optimize what we do. And the third is the way we service customers. We also, as payment service providers, whenever you want to understand what happened, and it's very easy to provide data, service, and intelligence into the stakeholders of the ecosystem by using agents. So AI is definitely changing the payments landscape very fast. It depends on the region and the type of use case, but that's something that I guess financial institutions in general, banks should be getting ready for, and that's where Yuno can really make a difference.
Mauricio, you left a position as country head of Mastercard, one of the biggest companies in Mexico, to go to Yuno. Is this because you think that these smaller payment companies are going to successfully take market away from companies like Mastercard and Visa or Stripe? Or was it more a personal thing that you wanted to be an entrepreneur at this stage of your life?
Yeah, so if you look at my background, I started at Citi, a very traditional global bank, for the first 16 years. Then I left for Rappi to go build a fintech. Then I returned to Mastercard, where I got my PhD in payments, like I call it. And I wanted to go back to building. And I think the stage of AI in payments, the stage of Yuno, um, was a good bet for my career, for my development. And I was getting into a space that I see a lot of growth potential for the ecosystem and also for the company. And, remember, I used to work with Juan Pablo Ortega, one of the co-founders of Rappi, who is the founder of Yuno. So this is me going back to the fintech space and taking a bet different from more traditional plays. but it's not leaving Mastercard, which is an amazing company, because I think they're gonna, you know, uh, lose in the game. Quite the opposite. We work a lot with them, and funny thing, they're a very close partner to us, the same as Visa.
And how important is Mexico to I see that you're dotted around the world. Obviously, got Colombian founders. Is Mexico a key market? Will it be a key market?
It is a key market. It is a key market in Latin America. It is a key market at a global scale. Remember that Mexico is one of these huge economies, probably like top 15 in the world in terms of GDP, that has still the highest amount of cash usage in the world. So when you think about the penetration of digital payments for big markets around the globe, Mexico is one of those frontiers and those opportunities where things can dramatically change with the entrance on fintech, with the competition that's being generated at the banking system, and with new technologies coming in. So, Mexico, I'm still based out of Mexico. I didn't leave. So that is pretty much aligned also that, besides my global role, I still want to keep a close eye and my feet, sorry, in Mexico, to make sure that we take advantage of the big opportunities that we have for the market.
Last question, Mauricio. It says your title is financial institutions and chief banking officer. What does that exactly mean? I mean, how do you distinguish your role from what some of the other people at Yuno are doing?
Yeah, thank you for the question, because I think it's very important. So we spoke about the fact that Yuno is a platform that connects merchants into payment providers. And the side of that platform that our payment providers is a collection of banks, acquirers, wallets, PSPs, switches, clearinghouses, BNPL players. So my role is to own that side of the platform. So, I take care of the segment of the payment providers. So the title tries to, cover all that space, but it's a very diverse space. So we decided to call banking and financial institutions, but it covers all that side of the platform that services or works with payment providers globally.
Mauricio, just a last question from me. AI is really taking over a lot of spheres that where we work, or what we do. Even on my travels, I use it. But it's not 100% perfect. Are you worried about that, or what is Juno doing with the margin of error that AI still has?
A couple of things. So first, I agree with you that AI is not perfect, and they call the errors hallucinations because it's a funny name, but they tend to make mistakes either because they didn't have the full context. I say they, no, because the LLMs don't have the full context, because they didn't take care, or they gave a response too fast. So it's very important to use your judgment and experience to make sure you extract the value that you need from the models, right? That's the first space. So I think that human on the loop concept, it's still very valuable, because we still are at our stage that we need to keep working with AI to help them improve in accuracy and delivery. The second one is something that we call the Yuno brain. So the way the company is setting its intelligence up is that everything goes into a central database that feeds into our agents. So that means that every meeting, every platform, every data from transactions that we have at the company is being fed into the central database where agents can learn. And funny thing is, remember that sometimes in companies you would have someone leave, and people would need to pass on the knowledge or get prepared and do hand over the work. Conceptually, we shouldn't need to do that, because everything will be centralized through the brain, which is a interesting concept that we're rolling out. So the idea is how becomes super efficient that way. So I'll give you a simple example. I have connectors of my agents into all the platforms I work with. That's Slack, Google Drive, Calendar, and that way I don't need to ask anyone for anything. Like today, I was going to have the call with you guys, and I wanted a Yuno background. I couldn't use for the call because we're on a particular platform. So instead of trying to call someone, I asked my agent to go and message on Slack, find where we can find it, and actually send the message to get it through. It was a little bit time constrained because that was like 15 minutes ago, so I couldn't get the right background. But, it makes the work so efficient because, in the past, I would have had to go try to look for the thing and, text someone or call someone. The agent's doing the work for me, and that's just one simple thing, right? I think agents work with me as part of my team, and it's interesting in that way.
I hope the agent was accurate with our profiles. I'm sure it was. Mauricio, thank you so much for joining us on such a quick notice, for such a great news on the part of Yuno. Good luck and congratulations.
Thank you so much for the invitation.
Well, thank you very much for joining Mex Moves. Hope very much you join us next week.